Bitcoin has just stumbled, and the shock is echoing across the entire crypto market. Shiba Inu holders are feeling that tremor directly, watching candles bleed as Bitcoin drags risk assets lower. But how exactly is Bitcoin's crash shaping Shiba Inu's path from here? Tonight, we break down the correlations, liquidation waves, and sentiment shifts, tying these two assets closer than many traders realize. Stay focused as we unpack every move. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. Over the last week, Bitcoin has dropped sharply, falling around 12% and sinking to a multi-month low after a strong run earlier in 2025. At the same time, total crypto market capitalization has slid to roughly $2.9 trillion after a heavy monthly drawdown, while Bitcoin's dominance has climbed toward the high 50% region, a classic sign that traders are retreating into the largest coin during a risk-off phase. Shiba Inu is trading around the mid-700 units area, with a market cap close to $4.5 billion in daily volume in the mid-100 million range. Across the board, altcoins have posted double-digit losses this week, and high-beta names like Shiba Inu are particularly exposed as liquidity thins and leveraged traders unwind positions. Bitcoin's latest leg lower has been violent. After failing to hold near prior highs earlier in the month, the price slid into the 80,000 band, erasing its year-to-date gains and wiping out a huge chunk of crypto value in only 6 weeks. Breakdown analyses point to a combination of profit-taking near the top, macro fears around interest rate cuts, and a steady stream of ETF outflows. As spot price cracked key levels, stop-loss orders and over-leveraged positions began cascading, deepening the fall. Live market feeds covering November 21 describe Bitcoin dipping below the mid-80,000 range as medium-term holders, who had sat comfortably in profit, finally started to sell into weakness, pushing the entire crypto market down in a single session. Fresh updates today highlight further weakness around the low 80,000 region, with Ethereum and other majors joining the move, confirming that this is a broad risk-off wave, not a small, isolated correction. Shiba Inu's reaction has been highly correlated. Price has slid in recent days and now hovers around the mid-700 unit zone, well below levels seen earlier this quarter. 7-day performance shows a clear double-digit percentage decline, underlining that Shiba Inu is being hit harder than many large-cap coins as volatility spikes. Market commentaries on the meme coin and NFT space note that major memes, including Shiba Inu, have posted heavy losses across multiple timeframes, driving the combined sector to its lowest valuation of the year. Analysts in those pieces directly tie this damage to Bitcoin's slide, arguing that when the largest coin comes under pressure, money drains out of speculative niches first. Separate briefings on the meme coin sector report more than $5 billion of value wiped out in 24 hours as traders flee high-risk plays. Shiba Inu sits squarely in that blast radius. Under the surface, technical and on-chain evidence back up this story. Bitcoin's weekly drop of over 12% slightly outpaces the broader crypto market decline, which is an unusual and uncomfortable pattern. When the market leader leads to the downside, altcoins typically suffer even more. Sector-level statistics show overall crypto capitalization down more than 20% over the last month, while Bitcoin dominance has surged, indicating a migration into the perceived, safer core asset. At the same time, meme coin reports describe a sector that has lost a large portion of its value this year, with Shiba Inu flagged as vulnerable because it is tightly bound to shifts in risk appetite and ETF flows. As large products shed exposure and order books thin, every wave of Bitcoin selling transmits into amplified moves in the meme corner. Oversold condition summaries also note that most altcoins are now deep in the red for the week, with some indicators flashing potential for a relief rebound, but only if Bitcoin first finds its footing. When analysts talk about Bitcoin's impact on Shiba Inu, they increasingly describe the meme coin as high beta leverage on the wider market. Data-driven breakdowns emphasize that Shiba Inu tends to outperform when liquidity is surging and new money is flooding into crypto, but it also tends to underperform sharply when Bitcoin retreats and liquidity drains. The recent rise in Bitcoin dominance and the meme coin sell-off are textbook examples. Macro-oriented reports point out that the current Bitcoin slide has removed more than $1 trillion from crypto valuations and has raised concerns about forced selling by large corporate and ETF holders if prices fall. Further, exchange commentaries highlight how many traders built leveraged altcoin positions under the assumption that Bitcoin would grind higher into year-end. The reversal of that assumption means those same traders must now unwind side bets like Shiba Inu to cover margin and reduce risk. Sentiment in the Shiba Inu community reflects this pressure. Coverage of the meme coin slump notes that many traders blame Bitcoin directly for dragging their portfolios lower, describing Shiba Inu and similar tokens as collateral damage of a Bitcoin-driven crash. Other voices argue that this is the inevitable correction, after months of speculative excess. Updates from major platforms describe social feeds where Shiba Inu discussions remain extremely active, but the tone has shifted from fearless optimism to cautious, risk-aware debate. Crash analysis pieces further describe fear indexes sliding into extreme territory, warning that while such levels sometimes precede sharp relief rallies, any serious bounce attempt in Shiba Inu is unlikely to last if Bitcoin continues to trend down. Looking ahead over the next week and month, the key signals for Shiba Inu traders are almost entirely tied to Bitcoin. Forecast models for Bitcoin had expected the coin to spend November, mostly in the mid-80,000 band. Instead, prices are testing the lower edge of that region, highlighting how fragile sentiment is. Crash overviews note that both Bitcoin and altcoins now sit in oversold zones according to several metrics. Historically, that can set the stage for relief rallies driven by short covering, bargain hunting. For that script to play out, Bitcoin likely needs to hold above recent lows, see ETF outflows slow, and allow the total crypto market cap to stabilize. Under that scenario, Shiba Inu could attempt to retrace part of its recent slide from the mid-700 units area. On a 3-month to 3-year horizon, Shiba Inu's fate remains deeply intertwined with Bitcoin cycles. If Bitcoin eventually resumes a strong uptrend, especially after this painful reset, high beta tokens like Shiba Inu can again move aggressively on the upside. But if Bitcoin spends a long period chopping sideways or grinding lower under macro pressure, Shiba Inu may experience extended stretches of stagnation or gradual bleed, interrupted only by occasional speculative spikes that are hard to time. Multi-year projections from various commentators increasingly frame Shiba Inu as a play that depends not only on its own ecosystem and burn mechanics, but also on how the broader Bitcoin-led liquidity tide behaves. From a risk perspective, the message is clear. Shiba Inu behaves like leverage on Bitcoin and on the crypto market as a whole. When conditions are favorable, that leverage can generate huge percentage moves. When Bitcoin stumbles, the same leverage magnifies downside. Macro reports emphasize that the current slump is rooted more in broader financial worries and positioning imbalances than in a failure of blockchain fundamentals. But that distinction does not protect short-term traders from volatility. For Shiba Inu holders, this means accepting that Bitcoin's health is central to their investment's behavior, and that ignoring this link can lead to painful surprises. So, that's the recent story of Bitcoin's stumble and Shiba Inu's struggle, two charts locked together in a nervous market. Will Bitcoin's weakness keep choking meme coins, or could a sharp rebound flip sentiment faster than most expect? Manage your risk, track the data, and never trade on hope alone. I'll see you in the next deep dive very soon. Until then, stay disciplined, curious, and brutally honest with yourself. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.